I'm joined now by my colleague Karen Manczko. Together we'll be discussing both markets and Wespath performance. Welcome, Karen. I have to mention that a few people at a recent Wespath-led event mentioned our webinar sessions, and they said that we do a nice job and we seem to be having fun. So I have to say that was very much appreciated.
We all love feedback and certainly want to keep making these sessions valuable for our clients.
All right, so let's get after it. Summer markets can be a bit sleepy, but not this summer. In July, we saw some soft U.S. data that basically was the final impetus for the Fed to cut rates, followed by some volatility in August on the back of the Japanese yen carry trades, and finally the long-awaited Fed rate cut in September by 50 basis points. Between all this economic news and a sharp escalation in the Israel-Hamas conflict, we did not have a quiet summer.
No, we certainly did not. But despite some of the themes you noted, markets were strong and closing the quarter near all-time highs. And we finally saw some rotation in U.S. stocks, meaning we saw more of the rally away from the Magnificent Seven and mega cap names and stronger returns in the mid and small cap space. As an example, the S&P 500 market cap weighted index, where the largest companies had the largest weighting, was up 5.9% for the quarter. The equal weighted S&P 500, which is where each stock has the same weight, was up 9.6% for the quarter. Can you guess what the driver of the rotation was?
I don't recall any big earnings surprises, so I'm going to guess lower interest rates across the board was the driver.
It certainly does feel like the markets have rewarded the mid and smaller names with expectations of lower rates. But remember, the rotation really started in July before the Fed actually cut rates by 50 basis points on September 18th.
All right, so let's quickly look at some of the data in the quarter that led to the rate cut. Because as you mentioned, the rotation from large to small in the U.S. started in July. So in mid-July, we saw the soft inflation print in the U.S. and this broad tone of concern, the wall of worry. It shifted away from inflation and onto growth, meaning inflation looks to be more under control and more predictable, and the bigger concern for the Fed now is on economic growth. So with this shift in focus, the markets really started to price in a series of rate cuts.
Yes, they did. July saw a major shift in rate expectations. Remember at our April update, the markets were only pricing in 25 basis points of cuts for the year.
Yeah, I sure do, and that sure changed quickly as inflation eased.
But at the end of July, the markets were pricing in 125 basis points of cuts, with some economists even calling for an intermeeting cut and noting that policy rates were too high for the economy that was slowing. So in this graph, you can see the huge shift lower in the yield curve for the quarter. For some context, the 2-year yield fell over 100 basis points on the quarter to 3.64%, and the 10-year yield fell 58 basis points to 3.79. And do you know what you notice about this yield curve, Joe?
It's much less inverted.
Correct. We have a somewhat normal-shaped yield curve, meaning rates are lower on the front end than on the long end. As a final note on the yield curve, the 50 basis point cut on September 18th was a fairly big event. While it was priced in since 1990, the Fed has never cut rates by 50 basis points outside of a looming recession or during a recession that was already underway. Yes, it's a very unique past 4 years, but certainly worth noting.
Thanks for that context, Karen. The shift in focus to growth in an interest rate environment should be a driver for the next several quarters. But let's shift gears to stocks and the performance of the Wespath equity funds. We can finally start the update without saying that the Magnificent Seven once again led the broader market. Because as we noted earlier, lower rates were a tailwind for mid and small cap companies. The S&P 500 gained 5.9% on the quarter, and the small cap Russell 2000 gained 9.3%. Looking international, again, we're seeing that international markets and emerging markets outperformed the S&P 500. The MSCI EAFE was up 7.3%, and the MSCI Emerging Markets Index was up 8.2%. Karen, what would you note here?
The developed world started easing interest rates before the Fed, which has supported these markets. And we also saw a large fiscal and monetary package from China near the end of September. Chinese stocks are up roughly 30% since the move, which has been a key reason the emerging market index has such a strong rally.
Yeah, the move in China is something that the investment team is monitoring, and we expect to discuss client meetings this quarter. Even after the 30% rally, Chinese stocks have very cheap valuations, but some strong tailwinds from the Chinese government. Shifting gears, how did the Wespath equity funds perform on the quarter?
So let's start with the U.S. equity fund composite. On the quarter, the composite was up 5.8% net of fees, slightly behind the benchmark of 6.2%. The outperformance of small and mid cap was a positive contributor to the fund, but the biggest detractor was manager stock selection, which led to the fund being just below the benchmark. Meanwhile, the international equity fund composite was up 8.1% on the quarter after fees, just in line with that benchmark return.
Thanks for that, Karen. One thing to note, in the July commentary, we discussed the most likely scenario for the rotation from the Mag 7 would be the earnings of these mega caps rolling over, alongside other earnings growth from other names in the index. And while the earnings for the mega cap didn't exactly roll over, the Fed rate cuts have analysts increasing their expectations for the mid and smaller names. So again, the markets are behaving as one might expect.
But the timing is always a challenge.
Yes, I agree. And we'll continue to watch to see if the mid and small caps can hit these new higher return expectations. So let's turn now to fixed income. Fixed income markets, we already discussed one of the big themes for Q3, with the Federal Reserve cutting rates after what seems to be a year and a half of waiting. With the yield curve shifting lower, the broad Bloomberg U.S. aggregate index was up 5.2% on the quarter, erasing the losses of the first half of the year, and now stands at plus 4.5% for the year. Karen, how did the Wespath funds perform in this new rate cutting environment?
The fixed income fund composite was up 5.2% net of fees, beating the benchmark by 5 basis points. The slight overweight to high yield was a positive contributor, and also the 10% weight to international bonds helped, largely due to the dollar falling 5% on the quarter after the Fed rate cuts. The Inflation Protection Fund did underperform for the quarter and year to date. The primary driver was the fund allocation and issue selection to emerging market inflation-linked bonds, as these currencies, specifically the real, weakened relative to the dollar. The fund's allocation to and manager issue selection in global inflation-linked bonds also hurt the fund's benchmark relative performance.
So Karen, we have an election coming up on November 5th, and in these close elections, the markets tend to behave with more volatility. However, there's little empirical evidence that shows that there's an impact on the broad markets. Individual sectors may see some rotation depending on new policy measures, but not necessarily the broader market. Our colleagues Frank, Hua, and Roger are going to have a lot more of that later on in the webinar. Regardless, regular viewers have heard that the Wespath believes in long-term investing, which means we try to tune out the noise and the fear of missing out. For investing, that can mean not chasing the latest trend. This is likely to be a very noisy quarter, but we'll stick to our knitting of long-term investing while looking for opportunities that may result in dislocation in the market.
Thank you, viewers, for tuning in. For more detailed fund attribution information, please check out the reports available on the QR code here. As always, please feel free to reach out if you have any questions. We appreciate the feedback and your trust in Wespath.